Bitcoin is following a phenomena called the QT ending bear market. We're doing exactly what we did back in 2019 right over here in price action history, which means theoretically a huge crash would be due. But hold on a second. The only reason for why Bitcoin fell down so much in 2019-2020 was because of the COVID-19 pandemic. A clear black swan. Would there be anything right now that can give us a similar black swan event? I don't know. We're going to talk about it. We're going to talk about how Stretch has gone so bad for strategy. It hasn't delivered on the comfortable life that Michael Saylor has promised, that this lady, AI-generated lady, is clearly living in the Caribbean somewhere. I know, maybe it was selling more product than the iPhone. Probably the best product in human history. I know that, but why aren't we at $100 where we should be? The whole point of the preferred equity was to give investors a way to escape Bitcoin's volatility. Buy Stretch that gives you a yield of 11.5%, subject to be changed, of course. Why? But we haven't done that. We haven't stuck to $100. We've gone so much lower, and it's all because of leverage, amplification. Watch the video until the end. We'll go over Bitcoin. We'll go over STRC, give you the updates on the Strait of Hormuz and world politics, and that will be it. If you're not subscribed yet, please make sure to subscribe for daily videos. I have an incredible video dropping fingers crossed tomorrow night, if not Sunday night. You will love it. Subscribe, turn on the notification bell, destroy the like button. Let's jump into Stretch's charts and give you the rundown of why we're dumping on Stretch. Michael Saylor promise. If you don't like the Bitcoin volatility, I've got Stretch. Stretch gives you a dividend of 11.5% per annum, distributed on a month-to-month basis. Now that is a twice per month basis. When BTC is appreciating in value, when common A stock of MSTR is above a 1.5 MNAV, meaning a premium of 1.5 relative to its net debt and Bitcoin assets, happy days. You raise a bunch of cash from MSTR, buy your Bitcoin, and pay off the dividend of 11.5% with the little bit of cash you raise whilst you're buying your BTC. There's great runway to pay off the dividends. Bitcoin is going up, treasury value is going up. Everybody jumps into STRC, specifically a week before that dividend payout hits the market. However, when Bitcoin is tumbling, common A stock value is dropping at 2x the speed. And being a treasury company with no operational business that's giving you profits to pay off the dividends, you still got to raise some cash. Buy up more Bitcoin, that's your whole purpose. You got to raise some cash to have a runway of paying your debts. Well, you dilute common A stock investor value. You dilute the share value, causing MSTR to tank, with your Bitcoin going into more and more unrealized losses by the day during the bear markets. Nobody wants to purchase Stretch. The trust in Stretch reduces. And when nobody wants to buy something, prices fall. You don't need sellers. If prices can fall on its own if nobody wants to buy. There's a competitor, SAT-A, giving you daily dividends, and even that is trading off parity. How has it gone so wrong though? Why are we down to a record low, unlike things like SAT-A? Well, leverage. If you tell people that this will stick to parity and won't really drift around much, and if it does, will increase the dividend so that it's lucrative to be an STRC holder, people will use leverage. They will lever against it. Amplify against it. That amplification of capital stuck into STRC, if confidence drops, buying pressure slows down, sellings take place, oops, you will get liquidated, margin called, resulting in a cascading, resulting in significant downwards price action. This is what went really wrong in the event for Stretch. Is it a Luna Can we compare it to Luna? No, we can't compare it to Luna. I think this comparison makes no sense at all. Luna had a failing stablecoin that got depegged, and to try and recover the peg, Luna sold off 80,000 Bitcoin into the open market. Didn't work. The whole thing went under. Stretch, massively over collateralized. Strategy as a company is massively over collateralized. Not Stretch particularly, but Strategy as a whole. 850,000 Bitcoin, immensely over collateralized. Like, we cannot physically see a repeat of Luna. Sure, maybe STRC value drops in the short term, but when Bitcoin recovers, when Bitcoin eventually starts going back up, and as long as Saylor is able to pay the dividend on Stretch, and they successfully increase the dividend on June 30th to something lucrative, I don't see it failing. And even if hypothetically Stretch fails, the impact on Bitcoin would be minimal. My concern for MSTR is you don't have an operational business that's profitable. So all dividend is paid off from either raising money on Common A and paying dividends as such, reducing shareholder value because you're diluting in a bear market. The MNAV is not at the level where you can raise capital and Common A stockholders benefit. No, you're diluting shareholder value. MSTR stock is already on the brink of technical collapse with a humongous head and shoulders pattern breaking down from the neckline. Thank God today is a market close day. In a bear market, you're diluting shareholder value. You're raising cash to pay off these dividends. Alternatively, you sell Bitcoin, which would hurt MSTR even more. Okay, maybe Stretch is going back up, but will the value you'll be able to get from selling Stretch equate to more Bitcoin than you sell? In a bear market, question mark. Okay, in a bull market, probably, but in a bear market, question mark. I don't find this ending up like Luna. Is it concerning? Can it lead into a death spiral where the accumulation of Bitcoin for the treasury goes from exponential to stagnation and then slowly dipping off? Maybe. Not a concern for Bitcoin IMO. Would I buy into Stretch or MSTR? No, I thought it was a good idea at the start, but I changed my opinion later on, and I'm very happy that I changed it. And I didn't put more money in MSTR or Stretch, because if I can just buy the underlying asset of BTC that their entire business is built on, why buy this? Not for me. I think Saylor is a genius. I think he's a cool guy. I think he will be successful at the end because Bitcoin is successful. He's chosen the right product to do this whole thing on. Doesn't mean I want to buy into the products though, or the stock for now. Maybe in the future. Maybe in the future things change, maybe, but right now, no. It's funny, there was a clip, Saylor in December, he said that he designed Stretch on ChatGPT. Let's have a listen and we can have a quick laugh. Here it goes.
I designed all these with AI. I couldn't have done it myself. I literally sat and I used artificial intelligence and I went back and forth with the AI for a few hours. And
so you were just on ChatGPT, just like the rest of us, figuring out how to design these different offerings.
And arguing with it and saying, can I do this? Can I?
And I said, if he had used Claude or Grok instead, maybe we wouldn't be facing a curly 12 or 11.5% loss. I designed Stretch with AI. Did you tell it to make no mistakes, Michael? Michael! It's funny. It's funny. Wishing Strategy all the best of luck. Hopefully it's able to recover. I think it will recover when Bitcoin recovers. The BTC bear market, it's Black Swan. No, it's different this time. 2020 and 2019, that correlation about to break. As you know, following the COVID crash, the government printed double the money in existence, which resulted in significant monetary debasement, pushing risk on and risk off assets higher. We're not getting quantitative easing at the level. We're not getting quantitative easing at all, IMO. We're not getting rate cuts for a couple of years. And Stretch, I don't see that to be a COVID-like black swan. I don't see it to be a black swan at all. This is the part where IMO, we decouple, we follow the 4-year cyclicality, head lower into Q4, find our low in Q4, and go up from there. That is my Bitcoin and strategy and MSTR opinions. What about the updates on geopolitics? If you missed yesterday's episode, President Trump signed a memorandum of understanding with Iran within the Versailles Palace in France. Quite a significant place to sign a deal. The most significant deal signed in Versailles was the Treaty of Versailles in 1919 after the end of World War I. It was when Germany lost Woodrow Wilson, the American president of the era, along with 3 other presidents of the biggest nations back then, created this agreement. Germany signed. It was a 14-point peace plan. Since Germany lost the war, they had to pay reparations to the affected countries, but it was a 14-point peace plan signed in Versailles with an American president. Fast forward to 2026, you're in Versailles with a 14-point peace plan, but unlike 1919, reparations are paid from America and a couple of other countries to Iran. Quite interesting, isn't it? It's not highlighted as reparations, but number 6 of the agreement that President Trump signed clearly says the USA, with regional partners, is to develop a definitive, mutually agreed plan with at least $300 billion for the reconstruction and economic development of Iran. That is reparations plus economic development. What President Trump said today was interesting because it pointed the adverse. He said, quote unquote, there is no $300 billion payment to Iran by the US. That's fake news. All there is for the US is success, lower oil prices, and a victory. Check out the stock market. Democrat propaganda at play. Is it the Democrats sharing propaganda? Is it the Republicans sharing propaganda? I don't know. Thankfully, the community notes came into action, pointed out number 6, sharing exactly the quotation that a $300 billion reconstruction plan for Iran is to be due. Politicians will be politicians, guys. Always do your own research, always verify. We have lower prices, true, but lower prices only went up because of the war. At least we're seeing the Strait of Hormuz have renewed activity. Quite active. It's not at pre-conflict areas. Of course, it will take some time, but this is a very, very good start, I would say. All right, that is a conclusion for the markets. It's closed. Markets are closed today. Close over the weekend. Expect less volatility. On the 1 hourly time frame, I was excited. I had a little bit of excitement. Why, you may ask? Because I spotted a small W pattern. Maybe if we can go above the neckline with good volume, we jump into the 63.8 areas. But in the end, still not so bullish, still not so convinced. Watching it out and yeah, just trying to find a good opportunity. When it arises, they can take their time. Thank you all. If you're looking for a place to be trading Bitcoin and crypto, check out our partnered exchanges using the links in the description to get the best campaigns available. With that said, have a great rest of your Friday night, and I shall see you on our next upload tomorrow. Take care, and as always, guys, bye-bye.